If you're a homeowner in Denver and someone's talked about wholesaling your house, let's talk strategy before you sign any contracts. So, today we're talking about wholesaling, and we've got Jeff Phillips with Vindicator Solutions here. Thanks for being here, Jeff.
No, I'm excited. Thanks for having me.
Yeah, so just to kick us off on this wholesaling topic before we jump into it, why don't you share with the audience kind of what is Vindicator Solutions? What kind of services do you offer?
Yeah, absolutely. I help homeowners navigate tough situations. A lot of the time, it's financial hardship, foreclosure, probate. I work alongside realtors, I work alongside lenders, estate planners, and private lenders to help come up with a custom tailored solution.
Nice. I do love that about your business because I think we're very much aligned in that way where we both know a lot about a lot of different things, and we are trying to make sure people know what all their options are and then connect them with the right people, where it makes sense.
Absolutely.
Yeah. So, wholesaling. What exactly is wholesaling in real estate?
Wholesaling is when you talk with a homeowner in regards to selling the home, usually um, at a wholesale price, which comes at convenience. Usually is what the trade cash for convenience, right? For time, maybe listing the property is just something they do not want to do. At that point, you have a signed purchase and sale agreement between a buyer and a seller, and in that agreement, there's a line there that says this agreement is assignable. And so when I've done wholesale deals, it's been when I go to a house and the homeowner says, "Hey, I want you to buy my home." And I tell them, "I don't want to buy your home unless you tell me you want me to buy your home." And in the meantime, I find someone that does fix and flip, or they're a buy and hold investor that has capital, which is the solution needed at the time to then assign that contract to with another piece of paper called an assignment agreement.
And so the homeowner is able to sell their house very quickly, very easily, but also for less money than if they were to put it on the open market.
Correct. Usually it's something that is a time sensitive, or the property's in such bad shape, or there's a situation personally with the homeowner that they just um want sorted out sooner than later.
Yeah, and I mean, maybe to make this even a little bit more clear, I could talk a little bit about like when I go into someone's house and we're trying to, a lot of homeowners, if they're selling, they want top dollar for their house. But to get top dollar for your house, it has to be in a certain condition, right? And not only that, so usually people are preparing, right, before it goes active on the market. So it's a lot of time, it's a lot of energy. It can be some money spent, whether that's new floors or paint or deferred maintenance or some kind of, upgrade that they want to make. I don't know. But that all is time and money, right? And that's how you're going to get top value or top dollar for your house if we put it active on the market. Um, Now that's not your only option, right? That's how you do it if you want to get top dollar. But if you're just trying to get out, and also showings, I guess, showings are a pain. I don't know if you've ever lived somewhere while you're trying to sell the house and you have to be ready for showings at any moment, and you have to keep the house like as perfect as possible. And then you get like maybe you have a 1 hour notice, and now you got to run around and make sure everything's clean and off the counters and, scoop the litter box or whatever. And it's a lot of stress and a lot of pressure. So that's not the only way to sell your house. And so there's other ways to sell your house that are much easier, much faster.
Right. In my experience when working with my clients, the first thing I explore for them, and I always try to get the most equity out of their house for them I can. That's how I operate. And so I'll go and say, "Hey, let's have a realtor come by and have maybe an appraiser look at it. And if it doesn't meet FHA standards, if it's not gonna be bought by if the buyer pool is limited because of the amount of financing available to that purchase of that house, that's when usually my realtor partner and I get together and say, maybe this is needing to be kicked down to an investor because it's the only person that can buy their house fast. When your buyer pool is limited due to the condition of the house and the financing available, and a timeline is needed, then that's usually when those worlds collide.
That's right, because a lot of buyers, if they're buying as an owner occupant and they're going to live there, they're getting a 30-year mortgage. And, the lenders have certain standards, especially in the government backed loans like the FHA and the VA loans. The government has certain standards that their appraisers are making sure that this house is, up to a certain standard of living. And if it's not, then you can't get those loans. And government backed loans make up 80% of deals. So if your house is not in good enough shape to pass an FHA appraisal or a VA appraisal, you've now limited your buyer pool to about 20% of buyers. And conventional and cash only. And these investors, they've just got this cash laying around, right? They're not relying on a lender or a bank to say, yes, you can have the money. We're going to check out the condition of the house. They just already have the money. So it makes it easier.
There's a couple other scenarios that I've seen in my business that equaled a wholesale deal. One of them was when you have squatters in the house that just do not call for a white glove service given by a realtor to show the house. They don't have access to showing the house. There's not a lot of buyers, especially lenders, that'll approve a purchase of a house if it hasn't been seen on the inside. And another way is when the house is being rented and there's a lease in place and showings are limited. And so there have been investors or homeowners that said, I don't want to disturb the tenants for that reason. Let's do it this route.
And we do have a whole section of the MLS that is for investors. And in that part of the MLS, you could expect to see things like, we're not doing showings until we have an accepted contract, or, we need a 24-hour notice for any showings because we have tenants in place. Or there are tenants in place, their lease expires on this date. So no one's going to be able to move in until that date. Because even when you sell a house, a tenant's lease stays in place until the expired date.
Yeah, especially in Colorado, that's the law. Yeah.
Yeah, Colorado is a buyer-friendly, tenant-friendly state. So do what you want with that in the comments. I'm sure people will.
So, yeah.
Oh, what do we have next? Oh, fact or fiction? Okay. Fact or fiction? Wholesalers are buying your house.
Fiction. Every single wholesale deal I've done, I've had someone else take my place on the contract. So in a wholesale deal, you're assigning the contract. So the buyer is actually purchasing the rights to the original underlying agreement, which says you get to buy this house for these terms and this price on this closing day. So essentially, I'm just having someone pay me for a fee for my position on the contract.
And I don't know if I'm accurate in these numbers, but it seems to me like, if you put your house under contract with a wholesaler, they find another buyer who's going to do the actual closing and come to closing with the cash, buy the house. And I feel like that difference in that amount between what the wholesaler is making and what the person's buying it for, the wholesaler's usually making like 5 or 10 grand. Is that kind of accurate in that world?
Yeah, no, that's pretty accurate. I know there's a few shops here in Colorado. I say shops, I mean there's whole operations that operate that they're a numbers volume based shop where they're just trying to make 5 to 10,000 off the top. They kind of bake those numbers in when they're doing the ARV and what the house is worth. Just for speed and efficiency. I have seen wholesale deals exceed 50, 60,000 dollars, but usually those are on higher price point homes. But your average home's probably 5 to 10,000. And in my business, I always give the most I can to the seller, and make sure that it makes sense for and the investor so that they can make their money so that they can continue their business. Now, one thing about wholesalers is they might have access to a different buyer pool that are readily available with cash. And that's just plainly because they focus on that in their business every day.
Yeah, I mean, wholesaling is a complete business model in real estate, and I think you're right. I think a lot of wholesalers are doing it on volume, and they are getting homes under contract as often as fast as they can. So I think it's a something where they're watching the MLS. Obviously, they like off market deals too, right? But I think that they have people that are watching the MLS for deals to go active or coming soons, and they are doing whatever they can to get that under contract like right away, right? Like whenever I have a listing, I almost always get a lowball investor offer. And they haven't even seen the property, right? They're getting these contracts together and sending them out and seeing what sticks.
A lot of these wholesale operations are more so marketing teams that do real estate. They're marketing heavy, sending out thousands of letters throughout, hoping they stick, and a lot of the time the numbers aren't accurate. So you got to be aware of the bait and switch that a lot of them do, where they'll send you a number that seems really high and you get excited. And then last minute they call you back and say, actually, this is what we can do.
Well, and where they have the opportunity to do that is in the inspection period because they might all the offer's probably already lower than list price, right? And if you've got a seller who's like, "Okay, I'll do it. I'll sign it for that low price." But now we enter the inspection period and they never even saw it to begin with. So now they're coming out to see the property. Now they're running their numbers and now they're saying, well, to make this work, we really need to get it at this price. And, you can either say yes or say no. I mean, when you're working with investors, those people are all about the numbers. You don't have a buyer who's in love with the house that wants to move in. You've got a buyer who, if the numbers don't work, they're walking.
Right. If it doesn't serve them, if it doesn't make them money, they're not attached to that one deal. They've usually got five or six in the hopper at any time. So
I want to do a scam alert. um, I think that a a lot of people are interested in real estate investing, and a lot of people are interested in learning how to be a real estate investor. And I just want to caution people that, there are so many of these seminars out there where you can come sign up for our seminar. Maybe they give you a free one first, like a little taster, right? And then at the taster, they're selling you on their full program for 20 or 30 grand. And for 20 or 30 grand, they're going to teach you how to be a real estate investor. They're going to teach you how to do wholesaling. And I feel kind of passionate about this because I talked with a woman who did this and she was just all bought into this idea of like, I really want to start real estate investing. I want to start doing this wholesaling thing. And maybe you could talk a little bit about like, what do you actually have to do to make money wholesaling? Like, what does that look like? Because I don't think people understand, like, what are you actually doing if you're making money as a wholesaler?
yeah, the barrier for entry, I always say the barrier for entry to be a wholesaler is very low. Realtors have to go through schooling and licensing process and have to go through CE credits on a yearly basis to keep that accreditation current. Whereas a wholesaler could have watched the YouTube video yesterday and started picking up the phone and calling homeowners tomorrow and really not know the dangers or the stuff to look out for legally that could get people in trouble. And so what wholesalers are looking to do is get in quick, get into an industry that's, obviously very financially beneficial, but they get in at a very low level and try to climb their way up into buy and hold investors. Wholesalers don't tend to stay there. They usually try to graduate into being a buy and hold investor. But you get so many people that get in and get out so fast that just don't really know what they're doing. So.
But talk about like, it could be calls or door knocking, either way. Like, as you were getting started, like, how many calls are you doing a day? How many doors are you knocking on every day? How many hours are you working?
So from that standpoint, as far as investing the time instead of educating yourself on how to talk to the right people about investing, it's going to take hours and hours of your time door knocking. I door knock 20 doors a day. Back when I was sending letters, we were sending 10,000 letters a month just to reach out to people to get properties under contract, and that's thousands of dollars. So you're going to spend the $30,000. You could have put that on a down payment on a house, and that's, I think, what Kiki's wanting to highlight is that, you're gonna put money in, you might as well, if your goal is to buy and hold and and invest into real estate, then you should put it into a house.
Yeah, I mean, I was suggesting to this woman that she take out a home equity loan on a house that she didn't have a mortgage on, right? So she's got a bunch of equity sitting there that she could probably take out in a home equity loan. I mean, I don't know, I'm not a lender, but taking that cash and using it to buy something and get a renter in there, like that's a pretty solid real estate investment strategy. But what she had already paid 20 or 30 grand for, I think because she had already sunk that money in, like she was really kind of tied to this idea that they had taught her. But I think that what she wasn't really, thinking about was like, you know, how much work would have to go into it. I mean, you're picking up the phone or you're door knocking and you're either talking to people on a foreclosure list who are obviously in financial distress, right? Or you're talking to people that you found that are in probate. So they've just lost a loved one. I mean, you know,
Wholesaling is a job. I'll just go to say it's not investing. It is a job because if you stop doing it tomorrow, you literally have no income or results. And so when people say I want to get into investing, well, make sure that that's what you're getting into and not getting another job, especially if you have a full time job. Wholesaling is a full time job.
yeah, for sure. Yeah, and that's why I wanted you to talk about it because
Yep.
I know you're just out there for hours every day. Um, well, let's talk about this maybe this myth, a bust a myth that's out there. Wholesaling is always a scam.
Myth. There's good players and bad players in every endeavor, every industry. And if you have someone that, goes through all your options with you, and especially if you're in a certain situation and you both come to the decision that, selling the house fast is the best option for you and that's what you want to do, well then wholesaling is a way. You just got to go about it contractually the right way. I mean, there's wholesaling, assigning contracts is available on some of the Dora contracts. You just got to make sure that that box is either checked or not checked in an agreement, and that everybody's above board on what's going to happen. The worst wholesalers are the ones that say, "I'm going to buy your house and I have the cash." And in reality, they're out there fishing for a buyer. They don't have one lined up and they don't have the cash, so they're not truly an investor. They're just someone being a middleman.
Oh, so you're saying that there are some wholesalers who are falsely representing themselves as buyer investors. They're not truly saying, "I'm a wholesaler. I'm gonna put your house under contract and then I'm gonna go find a buyer for it."
Correct. The best people in the business, they're transparent and they tell people what they're wanting to do. And the trade-off is sometimes you get people that say, no, I don't want to do that, that sounds like a scam. But if you're good at explaining what you're doing and you're talking to the right audience, then it can be a good part of the whole ecosystem,
Yeah, definitely, because I know for sure that there are sellers out there who, like, just want out and, maybe the dollar amount, whatever they could get, even though it's lower, that works for them, and they would be happy with that amount if they could just walk away tomorrow, and that's kind of the solution that you're offering when you're wholesaling, and it is a good solution for some sellers.
correct. Yeah, it is for the right people.
Yeah. Fact or fiction? Wholesaling is easy money.
I would say fiction. It's probably the hardest thing I've ever done time wise, but at the same time, because of what I do in my business holistically, it's been the most rewarding because wholesaling has been probably the least of what I've done to help people. I've stopped about 26 foreclosures in the last year and a half, and I say six of those homeowners, we came to an agreement that I was going to wholesale their property, and so um it's rewarding, but it's not easy money.
No, not at all, especially when you talk about the time, you're just driving around and door knocking or the time that you're smiling and dialing or I heard you say you sent out 10,000 letters a month. I mean, that's a grind.
It's a business in itself.
Yeah, definitely. Um, what are some of the biggest risks for homeowners if they're working with a wholesaler?
Right now, what I see people, and there's actually a lot of states that have made wholesaling illegal, and for that reason, you have to do a double close in order to accomplish what you're trying to accomplish, which is get a property under contract, not have to have any of your own funds into it, get a buyer to perform on the contract so that you can get paid the difference in between. And so you're in the middle of a lot of moving parts as a homeowner, so you want to be aware of your timelines. You know, if you're not if you're selling the home because of a payment issue and you just can't make the payment anymore, well, just know that a lot of the time, if a wholesaler is new and they don't have a accredited list of investors and buyers ready to go, they could be putting it out there in the world. I've seen people post it on Facebook and, hey, does anyone want a house in this zip code? I got it under contract. And when I see that, I say, you know, that's usually a rookie, because I've got my buyers in mind before I ever go to a homeowner with different ways they can perform, whether it be faster money and quicker to close, willingness to let them stay post occupancy wise, willingness to rent back the property to them. I marry the right seller to the right buyer. And if your wholesaler doesn't have that and they're fishing for buyers, then there's a lot of stuff that can go wrong.
Well, I think that that's, like with anything else, when you're working with somebody, you should be vetting them to some degree and finding out what kind of experience they do or don't have. How long have they been doing this? I mean, that's my recommendation all the time with all kinds of different professions. So it's the same is true for wholesaling. Like if you've got somebody, if you're in that position where you would like to walk away with some amount of money tomorrow and like you want to get a deal done quickly, and you have a wholesaler, knocking on your door, definitely be asking them, how long have you been doing this? What kind of experience do you have? What else should we be asking them?
Well, just at the end of the day, I ask the homeowner what they want, because the bad players will pressure a homeowner to do what they want, whereas I ask my clients what they want and I try to create that experience. And if wholesaling, if assigning a contract plays into that, that's just one of my tools in my tool belt to get the job done. It's always about the homeowner. It's always about what they need.
I love that. And it circles us back around because we're doing this episode is on wholesaling. We did one on short sale, foreclosure, probate. And in all of these things, we keep coming back to this thing like, if you're talking to somebody that is putting a lot of pressure on you, if you're talking to somebody who's trying to steer you to one option, you have more than one option typically. And so anything like that should be a huge red flag to you, and you should be putting the pause on it and calling a trusted professional, a trusted advisor, a great realtor, Vindicator Solutions, call somebody who's going to help you and don't let somebody pressure you into signing a contract, if you're not sure that that's what you want to do.
Yeah, if you get contracts in the mail, offers in the mail, you can always call Kiki or your realtor or me to find out if it's legit. Red flags for me are contracts and offers from New York or out of state, people that are trying to buy properties sight unseen, just kind of these volume spray and pray, businesses. You want to make sure that they actually know your property, you've seen it, they know what it looks like on the inside, because then you can justify their offer being the right one.
Well, and to piggyback on that, if we have a property on the market and we're considering selling to an investor or a wholesaler, you don't want to make that decision lightly. It's a good idea to check the person out because what'll happen is, let's say the seller says, "Oh, well, that's a low offer, but like I'll take it. Let's just get this done. I'll sign it." So they sign it, and then we get into the inspection period, and now things are changing. Like maybe that person made that offer sight unseen. Now are maybe coming to see it during the inspection period and finding, now they're actually vetting it for the first time. Now they're coming back and telling the homeowner, "Oh, we're going to buy it for less than what we told you." And if the seller says, "No, what they offered me at first was really my bottom. Like I'm not willing to go down here. Tell these people to go away. We're not agreeing to that. Let's go back on the market." Well, now we've gone on the market from active to pending to back on market. And it's not a great look because now any buyer who is looking at that and go, oh, well, it was off market, it went under contract, now it's back on market. What's wrong with it? What's wrong with it?
People will take note of that, especially buyers that are checking on a daily basis. They definitely notice when properties in and out of contract, and they definitely have those thoughts. I do too myself.
Mhm.
And so you're right. And one of the things that I always see is people pushing the closing date, consistently saying, I need more time. I need more time. If you start to see, someone that you're in a contract with continue to kind of take their sweet time and drag their feet, then that's a huge red flag. Usually that means they don't have a buyer. Because what happens is these wholesalers will get a property. Let's say they get it under the price that the seller wants. And we all know it's a little too high for what an investor will pay. Well, sometimes, you got these yes mans that'll get it under contract and tie you up for 60 days and then back out, or they'll ask for more time, or you'll see them send buyer after buyer after buyer after contractor to your house, and they don't really have a clue. And so you want to see it look a little bit more buttoned up. And if they're honoring their timelines, and that's a good sign.
What is a timeline that you could expect? Because I think I mentioned earlier, like if it's a cash deal, you could close in 1 to 2 weeks. If it's an owner occupant buyer getting a mortgage, we're looking at 3 or 4 weeks usually. But if you're a wholesaler, what kind of time frame do you usually say to a seller, I can close by? Is it 30 days? Is it 60 days?
So what's appealing to homeowners to take a loss or sell their property at a discount is usually the 7 to 10 to 14 day close. And that's usually pretty hard to do with a conventional traditional mortgage buyer, and that's why it's competitive, is the 7 to 10 to 14 days. Now you might have seen people close within 14 days with a traditional mortgage, but usually we aim for as fast as a turnaround as possible.
So while we're on this subject, I think we'd be reticent if we didn't talk about the we buy houses people, because I'm not even sure if I'm right about this. Is the we buy houses people, are they wholesalers or are they investors?
So I've seen both. Sometimes businesses will have it vertically integrated, so where they are the fix and flip investor that advertise themselves as we buy houses. Now we also have people that advertise we buy houses as wholesalers. So you get both.
Okay.
That's why the big question to ask is, are you buying my home, or are you going to be assigning this to someone else? And if they tell you, we're buying the home, then usually they've got their numbers in order because they are the end buyer, before the retail buyer after they flip the property, you know. So
Yeah, because a fix and flipper could definitely come in and say, I'm buying this house for cash, and I'm the one buying it because I'm going to fix it up and then I'm going to sell it again. So, yeah, very different than someone who is just wanting to sign a contract and then find a buyer or assign it to a buyer.
a good way that I vet out people that are reaching out to me when I have deals under contract as buyers is, show me a few projects you've done. And if they can't show you some houses that they flipped and bought themselves or that they own themselves, they're probably just wholesaling in.
Definitely. Let's see. Well, I think that we've covered this topic of wholesaling pretty well. Um, you know, and and I guess I'm just looking at this word off-market deal. Is that something that we need to talk about? Um, because we've kind of talked about both on this episode. Because I think you could find a wholesaler in an off-market deal or on market, either way. But I think when the people are knocking at your door, that's when we're talking about these off-market deals.
Yeah, I see a lot of properties that are wholesale on market when they've hit that 180-day mark. And I think everybody's kind of a little bit tired of that process. But usually that's because of a pricing issue initially on the listing. Unfortunately, that ends up being in that situation, which is why we talked, off record about pricing it right from the beginning when you are listing your property.
Yeah, for sure. Um, well, I can't think of anything else that we haven't covered with wholesaling. Can you?
No, I think we Did it all.
Did it. We did it.
Yeah. Yeah.
All right. Well, then we'll wrap this up and just really appreciate your time and all your expertise sharing what you know with the audience. Thanks for being here, Jeff.
This has been great. Thank you. Yeah.
If you like this content and want to support the channel, don't forget to hit the like, subscribe, and alert bells before you go.